Hi, this is Binu Joseph from Inditrade. We are entering into an event-heavy week wherein which the RBI policy, US FOMC meet, October F&O closing and Q2 results will decide further direction of the market. After reaching near to the all-time high level, indices have been consolidating in a narrow range in the past few trading sessions. The RBI meet is on Tuesday. There are many expectations in the market. One, the RBI is likely to raise the repo rates by another 25 basis points. Two, further lower the marginal standing facility MSF rate by 25 basis points. 3. RBI may also widen the repo window back to 1% of total deposits or could increase the 7 to 14 day term repo window from 0.25 to 0.5%. The benchmark indices reaching an all-time high sooner or later will depend on how many of these expectations comes true or not. The argument for repo hike are that rising food prices, especially of onion and other vegetables, pushed up September inflation to 7-month high of 6.46%. Thereby it rose for the fourth month in a row. Also, the combined consumer price index rose 9.84% in September. Some economists expect this is to be the final rate increase by the central bank this fiscal year, given the growth concerns. The expectations of MSF cut is because of recent stabilization of currency and increasing possibility of delay in US Fed tapering. This step, if comes, will ease liquidity further for banks. After both these changes, the differential with the repo and the MSF rate will narrow to 100 basis points. Another reduction in MSF will result in lower short-term rates in the system. The third step is of the least probability but an option to increase the credit availability in the system due to the busy season and on growth concerns. RBI usually surprises the market, and if only repo hike and no reduction in MSF or a repo hike above 0.25%, then it could hurt the sentiments badly and we could see a knee-jerk reaction in stock indices. However, because of the good monsoon followed by the better crop availability and increasing probability of delay in US Fed tapering, if repo rate hike may not take place, then that could bring some cheers to the market. During the week, some of Nifty measures that would announce Q2 results include Maruti Suzuki on Monday, NTPC Ranbaxy on Tuesday, Bharati Airtel, DLF and Jindal Steel would announce their results on Wednesday, IDFC and Dr. Reddy's on Thursday. The market may remain volatile from the middle of the week due to the October F&O settlement on Thursday. The HSBC manufacturing PMI numbers are expected on November 1, which would impact the market trend on Friday morning session. In US, S&P closed at an all-time high on last Friday. Nearly half of the S&P 500 companies have reported their third quarter results so far, and 69% have been beaten market estimates. About 24% of S&P 500 companies will report their third quarter earnings this week. The US Federal Reserve meeting on October 29 and 30 is not on the minds of most market experts as they roll out any announcement to taper the 85 billion US dollar a month bond purchase program. However, market participants would keep an eye on any hint on the timeline for the tapering at the meeting. A technical outlook on Nifty. Most of the indicators in the daily chart now giving negative signals. The RSI is sliding down from an overbought zone and lost its trendline support last week. Also, it crossed its short-term moving average from the top, which is a negative indication. Now, currently RSI is at 62. The MACD is showing a negative signal crossover from the top. The slow stochastic 2 gives a negative signal from an overbought zone after a signal crossover by the percentage K line from the top. Regression studies suggest that the benchmark is coming down from an overbought zone at the top line. Last week, the benchmark has fallen from a rising chart pattern. The critical level for the week is at 6088. And after the RBI policy meet, if the index sustains below this mark on Tuesday afternoon, the downside fall may gain more momentum. The first support below this comes at 5932 level, and in the past it got multiple support around this level. Then the FOMC rollover volatility and US Fed meeting outcome could trigger further direction from this level. The major support for the weeks below 5932 is somewhere around 5825 mark. Which is near to its 200 and 100-day moving averages. On the other hand, if we get some positive surprises from RBI on Tuesday, then it can create an upside journey in the Nifty index. On the upside, 6248 could be the first resistance. On top of this, the index could hit a new all-time high, and the possible resistance is somewhere around 6375. Thank you for watching the video. Disclaimer.